Should be started. The camera's not on, so you know. I'll check because I never know if my audio is running. Let's see.
Should I put Zapstream up? Zap.stream up? There's a lot of viewers from that.
How can we just link it to my
All those 5,000
streams?
all those 5,000 Nostra users.
Yeah. Okay, audio's working. I heard it.
Nice.
All right, so I guess I'll start.
Do it live.
Yeah. I see one viewer. I guess it's myself. I'll keep this on. All right. Do a live scene. Great. Oh, not this. Where is? Wait. I'm trying to get my other screen. It's not capturing it. It's always something, you know? Oh, there it is. So, today it's gonna be a special format. It's like almost like a podcast format because of the low attendance. Here is my co-host.
Interactive? What's up?
No, it's gonna be more interactive. So I'm gonna ask you questions and
So it's
you
more
can
of an
answer.
interview?
Huh?
Am I the guest for today's episode?
Yeah, sure. You can be the guest.
All right. Understanding Bitcoin source.
Yeah. So today,
Special guest.
can you tell everyone what we're gonna be talking about?
Designing layer 2s.
Yeah. Awesome. So we're gonna be the new Bitcoin Uncensored.
Okay.
So here's a statement that I have. It's that fees are a consequence of Bitcoin's success. What do you think of that statement? How does it make you feel?
It's designed with more demand for block space for fees to react to that. So
Yeah.
yeah, if Bitcoin gets used, then you would expect fees to respond.
Now, yeah, I would say it's a successful outcome,
Yeah,
right?
success.
So what you're saying is Bitcoin doesn't like poor people.
Right.
Yeah.
No, yeah, it's
Okay.
designed,
Just kidding.
designed for rich people.
Yeah. So I have some reasons here about why fees are a consequence of Bitcoin success. So fees do mean the block space demand is high, which is what you just noted. Yeah, block space is valuable because of the decentralized nature of the network. People love decentralization, and if it was owned by the government would be the same as any other coin. Decentralization is achieved by keeping block sizes bounded for easy broadcast and validation of the ledger. So I see these things as like a cause and effect. What do you think? Like fees mean the demand for block space is high. Demand for block space is high because it's decentralized, and it's decentralized because we are able to keep the ledger within a size that most people can download it.
So how much
easily.
of these fees are like reducing decentralization? Like would there be more adoption, more nodes, and more if fees weren't so cost prohibitive?
I don't think so. I mean, maybe there'd be more users, but of Bitcoin in terms of
Right, like people
Like
don't
the-
want to use Bitcoin as peer-to-peer electronic cash.
Right.
They want to use it as digital gold.
right.
And if you had lower fees, more people would probably adopt it as the peer-to-peer electronic cash. So
Yeah, but maybe we also have to ask what our definition of decentralization is, because even if we have more wallet users, there's still the same
Yeah.
number of nodes, and that doesn't quite help decentralization in the way that I'd want it to be. I want everyone to have their own nodes running so that no wallet provider could lie to their users. And then it would just be another authoritative source for money, the wallet company. Anyway, what we were just talking about, hard money or everyday currency. Michael Saylor has been doing the circuits on Peter McCormick and all our favorite podcasters.
Boomer TV as well.
Yeah, Boomer TV.
Yeah, it's out there.
Okay, yeah, he's done a lot of things. And one of the questions he's asking is, should Bitcoin be hard money or everyday currency? And some people kind of dismiss his claims and they're like, why can't it be both? And while I agree to a certain extent, I also acknowledge that there does seem to be some design trade-offs in how we move forward. For example, Roger Ver thought that he was making the decision for everyday currency when he made the block size bigger.
Yeah.
Again, I kind of reject that hypothesis because of my last slide. But maybe there are some design trade-offs that we have to make in thinking which one we want to achieve. And if we want to achieve both, how big are the sacrifices we're making. So what is a layer 2? Do you have any definition for layer 2 you want to give?
And it's an off-chain scaling solution for Bitcoin with a unilateral exit back on-chain.
Okay, so you for sure need that requirement for unilateral exit.
That's like the main thing, because there's like Coinbase moves around on their their database, like who's got what balance, but they're not actually broadcasting anything to Bitcoin.
And they're not a
so
layer
I
2.
would not call that a layer 2, but it is off-chain.
It is off-chain.
They're moving value from one account to another, but there's no actual footprint on Bitcoin, and there's no ability for the person whose account that is to unilaterally exit on chain. They have to ask permission for Coinbase to send or broadcast a Bitcoin transaction to something where they have keys.
So like Wallet of Satoshi.
Yeah, Wallet of Satoshi.
Like they have their own payment network.
Okay.
And only when you try and send to somebody outside of their database does it actually make a Lightning payment.
Mm-hmm.
So you're not really using Lightning as it's intended. You're using their internal network. Is that a layer 2? No, because you can't
get a
exit.
unilateral exit on chain, or do I have to ask a Wallet of Satoshi?
You have to ask Wallet of Satoshi.
For permission.
Yeah.
So I think that's where it gets into permission is the
key
threshold
of
is this permissionless or is this a permissioned custody or permissioned kind of.
So distinction
scale.
for you is that you need this unilateral exit.
Yeah.
Okay. Well, I have some definitions from others we may respect in the space. So this is from John Light. I think that
good skater.
is, oh, is he?
Mm-hmm.
So is Coinbase?
Shredded at proof of skate.
Okay. Is Coinbase a layer 2? So Nifty Nye says no. Her definition of Bitcoin L2, a separate accounting system for sats, where the authorization to execute a transaction must be granted by the holder of the account primitive, i.e. Lightning Channel, Liquid Address, or Fedimint eCash. So what do you think of this?
So, separate accounting system for sats, where the authorization to execute a transaction must be granted by the holder of the account primitive. It seems like a fancy way to say if you have to ask permission, it isn't L2.
But you do for Liquid in Fedimint. That's why I was very confused about this.
Yeah, the account primitive. So like whoever's.
But what's an account primitive, right?
Yeah. So not your keys, not your coins is a principle that you're asking for permission to get access to someone else's coins because whoever has the keys ultimately is the account primitive. But they're giving you some pixels on a screen or some shit that says you have a balance of this amount. But yeah, it's not a L2 unless back to my earlier thing.
But Coinbase should be in here. I feel like if we're including Fedimint and Liquid. But again, we have another definition we could look at. But
yeah, Lightning would be the only one where you're not.
I feel like all these things are very hand wavy.
No, it's subjective.
Well, even with your subjective definition, I just feel like
objective.
the definitions aren't as hard as I'd like them to be sometimes. So something else from Mononauts. If your Bitcoin L2 doesn't support unilateral exit, that's not your L2. That's a multi-sig.
Right.
So this is more aligned with, what you were discussing. Yeah, you remember because of a BitDevs topic.
I can roll with that one.
Okay, and here's another one from Portland.Hodl. What is a Bitcoin layer 2? He had a slide. Definition: layer 2 solutions refer to various protocols that are built on top of the Bitcoin layer 1 protocol to improve functionality. These layer 2 solutions do not change the rules of Bitcoin. A layer 2 is analogous to an extension. An example are Google Chrome extensions. They do not change the way Chrome works, but do add features to the browser. You can build anything on top of Bitcoin's foundation, but the foundation itself can't be changed. So, I don't know. It's like a lot of the same, okay, yeah, this is something, but I'm still not quite satisfied, and I put these dots, ellipses, because I was, yeah, I'm still kind of conflicted on what a layer 2 should be. So I try to make a definition that I thought was harder. So going back to the question, so what is a layer 2? Because I feel like I didn't get the answer from all these other things. I don't know if you felt like they satisfied, your itch for a definition, but it did not for me. How do you like this? What is a Bitcoin layer 2? A technology that lets you make Bitcoin-backed payments off-chain and can facilitate payouts on-chain. I use like Bitcoin-backed instead of Bitcoin-denominated because, like Wallet of Satoshi, for example, but Wallet of Satoshi should be Bitcoin-backed. You just can't audit it.
So the payout is the exit.
But it's not unilateral. So I would be okay if you call Coinbase a layer 2, in my definition. And I feel like this is a very hard definition, like easy to understand. All the definitions in this sentence you could probably
it can
understand.
Facilitate payouts on chain, but you don't care that it's a permission system
No.
or that the user can at any point
Not from my definition. I think it's more useful to say, hey, these payments are Bitcoin backed, and whatever the Bitcoin it's backed by, there is some system to pay the user out, on the Bitcoin main chain. Now, whether you can audit the Bitcoin that this layer 2 system has or not, that's a different question. So Fedi mints, for example, you cannot audit, right?
They do not allow you to audit.
No, Liquid you can audit, but you can't really do anything if they try and cheat you, which I'll go into in the later slide. Lightning seems to be the closest to what people would like in a layer 2 solution, in that it does let you do a unilateral exit without having to ask anybody.
That's I like that. I don't like this as much because it doesn't factor in the permissioned nature of the payout. I think that's the whole point.
For me, I'm more permissive, and you'll see.
You're giving up sovereignty. And if Bitcoin is supposed to be peer-to-peer, why are we scaling with third parties?
Yeah, I mean, the reality is the whole point of layer 2s is to make payments, right? To ideally make everyday payments, hyper Bitcoinization. And we can't do that with the main chain right now.
But how about
and there have to be trade-offs.
Payments that are peer-to-peer.
But if we could, we would, and we can't. And we've seen problems we have with Lightning. Yeah. I work on Lightning, like every day. I'm working on a system for Lightning.
I just think the ambition of having permissioned scaling solutions is a lot less compelling than figuring out, the consensus around a peer-to-peer electronic cash is such that if you want to do payments, you don't give up the peer-to-peer nature of how you're doing payments.
Yeah, I mean, but do you see uses in these other things like Fedimint or Cashew? Those are permissioned, but it has a place for payments. And maybe instead of thinking
but the use certainly shouldn't be scaling Bitcoin. If Bitcoin is
but those are 100% what they are doing.
Yeah.
So.
Well, it is what they're doing. So I don't know.
But let's look into a closer look with this definition, and I'll kind of have unilateral exit as a consideration.
Primitive 1 says things like Lightning are more peer-to-peer than Bitcoin actually is. They aren't decentralized, but they are peer-to-peer.
Peer-to-peer. I mean, Bitcoin's very peer-to-peer too. If you run a Bitcoin node, you could receive payments from the gossip network that eventually get mined, and you can receive blocks that confirm transactions. So I'd say if you're a node runner, it's very peer-to-peer. Same thing with Lightning. If you're a node runner, it's very peer-to-peer, but not everyone runs Lightning nodes, and not everyone will run a Bitcoin node.
A lot of Bitcoin users are ultimately dependent and subservient to the node runners and the other people.
Yeah, same thing with Lightning nodes. I wouldn't say Lightning's more than Bitcoin. If you're looking at the subset of Lightning users that have Lightning nodes, maybe. Here are my constraints when designing a layer 2, though. So we must have on-chain collateral for payouts. Again, this is part of my payouts definition. I'll ask for your thoughts. But we need a way to prevent / disincentivize double spends, right? We need a communication network to transact over, so I can send you whatever information you need. And we could potentially have a unilateral exit.
Potentially.
Potentially, right? I don't know if it's needed. It's desired, but when we're scaling Bitcoin, I don't know. I'm trying to get chat to show up on my phone, and it's just lagging. It's not
I'll
showing
read
anything.
it. There's been no.
Okay, yeah. As long as you have it open, that's good enough for me.
Yeah.
Yeah, so what do you think about my constraints when designing layer 2? Do you have any questions?
Must have on-chain collateral for payouts. Needs, so whether it needs to be audited or not, you don't care?
Auditability.
It just must exist.
Yeah, auditability, I am also keeping an open thing, just so I can classify Fediment and eCash as a layer 2.
You need a way to prevent or disincentivize double spend.
Yeah.
So that needs to be built in. You can't double spend on the off-chain layer 2 or whatever.
Right.
And a communication network to transact over.
All these sound somewhat sensible.
Like a gossip.
Like a gossip, but doesn't need to be.
And the unilateral exit, why is there asterisk?
Because some people, like yourself, would say that this is needed for a layer 2. I'm more permissive, and I'm like, okay, I'll let the Fedimints and the eCash be layer 2s, and of course, I'll let Liquid be their layer 2.
Yeah.
But this is me acknowledging that some people would like a unilateral exit, so I'm adding that as a constraint.
Right. Otherwise, you're just doing permissioned.
I agree. Unilateral, is a very nice goal to try and achieve. But until we get there, I think there's room for other solutions that can help scale Bitcoin and are better than using dollars.
Primitive 1 says, I like these standards, but I wonder if we could imagine a layer 2 that wasn't a financial layer, but some other kind of secondary layer to Bitcoin.
But then are they layer 2s? So when I say Bitcoin-backed payments, maybe an example that I was going to put in my slides was Taro or Tapass.
Tapass.
Taproot assets is a way that you can mint new assets like USDT stablecoins, but they're not backed by Bitcoin payments. Like I could send $1 million in a Taproot asset transfer without actually having to transfer $1 million in Bitcoin. So like that, I don't consider it quite a layer 2 if it's not payment related. I consider that a meta protocol. Also because they have, like their own network that doesn't quite need to be like attached to the chain. It does to see that there's commitments there. So I don't know, I'd call it more of a meta protocol because it doesn't make payments. Or payments that are backed by Bitcoin. So just to elaborate more on the fact that I think we must have on-chain collateral for payouts. So we need a way to bring funds into this collateral. So an onboarding mechanism.
We've got a question.
Yeah? What's
First,
the question?
Are open timestamps a layer 2?
I'd call that another like meta protocol if it's not doing the Bitcoin backed payments, but that's just me. Yeah.
So if it's not a financial layer, tying back to the
yes,
earlier
this is what I have chosen for my definition of a layer 2 and what I was going to work off of.
Payments.
That lets you make Bitcoin backed payments off chain and can facilitate payouts on chain.
Mm-hmm.
But open timestamps is very cool.
But not a layer 2.
I call it a meta protocol.
Meta protocol.
It's preferable if L2 currency is auditable against collateral. Again, this is what we were talking about. So custody of the collateral should have some kind of counterparty like custody. So if you're in a layer 2, usually this layer 2 doesn't let you solely spend the funds in collateral. You have to have some type of counterparty who's custodying this with you. Any thoughts?
No.
Okay. So what are some ways this can be accomplished? Can you tell me how we can get something in collateral? Or what's the thing that your mind goes straight to when you think of collateral on Bitcoin?
I think like opening channels.
Opening channels, yeah.
Channels.
Multi-sigs,
yeah.
right?
Or something like that.
And I have this multi-sig funds or equivocation collateral.
Double take?
Yeah, so Stephen Roos and James Dorfman, they worked on this project called Double Take, where it was a way that you could make unconfirmed transactions such that they can be trusted by the recipient. And you did this because if you decided to try and double spend that unconfirmed transaction while still unconfirmed, there was an on-chain collateral that you could present the two signatures to and collect. And this is on Liquid because Bitcoin doesn't have all the opcodes you need to perform this type of check. But I thought it was an interesting idea. And something else you could do with Bitcoin if we had covenant opcodes. You're just having some collateral on chain. I pay you. I'm like, hey, I'm good for it, you know.
Right.
And of course, there's like other problems. Like I can't spend more than I have collateral for. And there has to be a way for my recipient to guarantee that I'm not making payments above what I have in collateral. So the other thing is that we need a way to prevent / disincentivize double spends. So with off-chain payments, the person who custodies the collateral is essentially giving an IOU to anyone transacting off that collateral. So in the Lightning Network, this is the person who funded the channel, if individually funded. So what I meant by this is like, if I were to fund a channel between you and I, all the funds would be on my side, right? And on-chain, it is like, yeah, it's all supposed to go to me. I have the refund transaction for that.
Yeah.
And every single time that I make a payment with you, it's almost like I'm borrowing from you. Because my on-chain, I will always have that initial transaction that allows me to refund.
You're good for it.
I'm good for it. But I have a transaction that allows me to take my stuff back with a refund.
So how do I enforce that I'm actually getting paid?
Right, and that'll be this like penalty mechanism that we'll go into later.
Okay.
But I did want to demonstrate that, like, I think of it almost like borrowing. If I fund something and I pay you using this on-chain footprint, and I give you this unconfirmed off-chain transaction, I'm borrowing from you. Mm-hmm. If I have a transaction that allows me to take all the money back. So on-chain collateral holder is a borrower, and anyone they give money to is now a lender until an on-chain transaction happens. Okay, yeah, so I was saying, if I fund a channel, give some money to him, I become a borrower, and he becomes a lender. Because I can always theoretically lay claim to that on-chain footprint, all of it. So this problem ultimately comes down to, how do you stop a borrower from stealing your funds, right? So in the physical world, we threaten them with violence from the lender.
Throw them in a cage.
Yeah, like a loan shark. Or with violence from the state.
Yeah,
and that's closer
bat.
to what you're thinking of, throw them in a cage. And these are reactionary actions. And I want to emphasize that a lot of these things that we can do on Bitcoin are only reactionary. We can't really stop someone from doing the wrong thing. Yeah, you have any comments?
Yeah, I mean, that's, you could have insurance companies or something that...
Insurance? Yeah. Although I think insurance, is evil. You know this.
They have mechanisms to collect,
Sure, insurance. Insurance could be a way, yes. Yeah. But how do you facilitate that? Maybe you could have subscription payments on Lightning to an insurance company and they have on-chain collateral.
Yeah.
I don't know, something weird like that. Maybe you just came up with a new layer too.
Yeah.
Yeah.
It's probable.
The Insure coin.
Insure VM.
Insure VM, I like it. Start talking to VCs,
I already have meetings.
So we also need a communication network to transact over. I think we need to coordinate somehow, of how we want to make our off-chain payments, because if these are not on-chain, then they're probably not going to hit the mempool, and there needs to be some kind of communication between you and I. So when we're making payments that aren't tracked by the Bitcoin blockchain, we need some kind of new communication mechanism to pay each other with. It could be peer-to-peer from in-person transactions, or it could be bootstrap a network with gossip.
Right.
You could also have like a client-server model, and I talk about that a little bit later. So unilateral exit, a requirement for then I tried to make a nice definition of what a unilateral exit is. Because again, definitions are everything. I think people just use things.
Why is it unilateral and not permissionless?
I don't know. This is what we use,
Yeah. But the idea is that you don't have to get permission to leave.
Well, I have an idea what it is.
Right,
Yeah,
what is that?
And I think it's good that we make concrete definitions for things so that we could, have intelligent discussions moving forward where we're not arguing over semantics. So, a unilateral exit means we can leave the layer 2 if we can construct a transaction. I just spit my tongue. We can construct a transaction that can let us claim our Bitcoin on-chain, yeah?
Okay.
And the permissionless quality of Bitcoin is upheld. We can always get our transaction mined. So we can leave layer 2 if we can construct a transaction that can let us claim our Bitcoin on chain, that's unilateral,
Yeah.
and that the permissionless quality of Bitcoin is upheld.
So it is all about the permission. We could just call it permissionless.
Right, but there's assumptions on Bitcoin that need to be upheld.
Right,
Like
so
that,
you can-
and they could fail.
You
But
have to be able to construct the transaction in order
Right.
to demonstrate that you're not requiring permission for somebody else to construct the transaction.
right, and not only construct the transaction, but get it mined and like have reasonable assurances that it won't get stolen.
It comes down to, can you construct this withdrawal or payout yourself, or do you need to go ask permission for somebody
Yeah.
to construct the payout for you?
Right, and can it be reasonably gamed? And if it can be, is it really like a good
Like if I
exit?
can SIM swap in to get like access to SMS based verification, which then asks which is able to construct a transaction from then. Like, is that what you mean by gamed? Like,
I was more thinking like if you broadcast a transaction to the mempool and the game theory of stealing your stuff is so strong that your transaction never gets mined. And
but like if other people could find ways to construct transactions that they shouldn't be able to.
right, or that like they, yeah, that they, not that they shouldn't be able to, but like
Like
if
they are the primary, what did the earlier thing, the primary
account holder or something like that.
it was something
I don't know. I did not like that definition.
primitive,
But-
account primitive.
Yeah, an example of like this is if we have a Lightning channel, right, and you broadcasted an old commitment transaction, and I try to do my punishment transaction, but a majority of miners hate me. They never mine my punishment transaction, and they all let you steal from me. Now, if we had a network that ended up being like formulated like this, then do I really ever have a unilateral exit if I know the miners hate me? So like we're assuming that the miners are like decentralized enough so that they can't coordinate in this way to attack me.
Doesn't seem like the best assumption.
But it works, right? I mean, if we're thinking about Lightning, there's a time delay, so it's not. You'd have to get miners to collaborate for like X amount of blocks, and it's like the odds of you doing that are very like slim. Whereas if it was just like one block, like and then you could spend, then it would actually be a lot easier to steal people's Lightning transactions. Or their channel bounces when really they were doing that maliciously and should have had the revocation against them. So yeah, this definition doesn't enforce a requirement that our funds can't get stolen. And that's what I was talking about right now. Lender can always get their money. So that kind of makes sense? Yeah. So now we're going to get into the meaty parts of case studies.
Okay.
And in the coming slides, I'll be going over some of the more popular layer 2s in the space and seeing how they adhere to my requirements.
Are they actually layer 2?
Yeah, I mean, all these I do classify as layer 2s. It's just like they adhere to my requirements in different ways. And like how they accomplish the adherence is also important. So, the Lightning Network. What can you tell me about the Lightning Network?
Well, it's got the payouts to account primitive. it's
Yeah, it's like, what is an account primitive?
I would expect this one fits your definition.
Yeah,
Yeah.
this one definitely does. So
Yeah.
I try to go over like the basics of how you onboard and transact for each of these layer 2s.
2 of 2 multi-sig.
Yeah, a user puts their funds in a multi-sig with the counterparty, but before I broadcast this multi-sig, I always make sure I can get a refund, right? Because just in case like you're not responsive, I don't want my money to be lost.
Pre-signed refunds before. So there's the unilateral
Close. Yeah. So if I just want the money back because you're not, you went off somewhere and don't even care about transacting with me anymore, then I want to get my money back.
Yeah.
And then if you actually want to engage with me, then we'll move to the transacting period. This is like the second base of the Lightning Network. So a user proposes a new transaction spending from their multi-sig with new amounts for the latest update. So we'll do some commitment transaction update that says, all right, the allocation of the funds is now different. You are given 2 Satoshis and I'm given the rest of a Bitcoin minus 2 Satoshis. And 2 Satoshis wouldn't work. I mean, it's so stupid to do, but just get put to the fee. Anyway, the information is given by each party that will allow the old update to be stolen by the counterparty of the broadcaster. So we exchange information every single time we transact, such that you can take all the funds in the channel if I lie and I put an old state that I'm not supposed to. So they have like guardrails on getting someone to do the right thing, because if they do the wrong thing, there's a way that you
penalties, right?
Exactly receive this huge penalty. You can take everything in my channel.
Yeah.
You know, I'll be left, you know, broke and penniless. Assuming that you're online and see me cheat, which isn't always the case, right?
So interactivity.
Yeah, so you always need to letting know to be on. So adherence to constraints. On-chain collateral for payouts. The user puts their funds into a multi-sig with a counterparty. Balances can always get paid from this multi-sig with refunds or commitment transactions. So the collateral here is that channel that we created in this multi-sig that I can't spend by myself, that I need you to spend from either like actively with the collaborative close or passively because you went away somewhere with my commitment transaction and doing a unilateral exit. So, you know, does this meet it? You know, I should have put a huge check mark here.
Check.
Yeah, it meets it, you know, on-chain collateral. So double spend prevention / disincentive. We were talking about this before.
Mm-hmm.
Lightning Network transactions can be double spent, but there's a payment path that would allow the counterparty to take all the funds in the channel in that scenario. So if I'm
These are the pre-signed ones?
Yeah, these are the pre-signed transactions. So when we, if I make a commitment transaction with you, I make the update to our channel, then I make another update, you know, that old update is no longer valid. And if I were to try and broadcast it to the Bitcoin main chain, that'd be like a double spend because I was already committing that to the newest commitment. That's why you can now steal it from the on-chain transaction with the revocation key. So all transactions have a collaborative element to it. And any paths that allow a single spender has a timeout. So if we don't do the collaborative close, I can't get my money back immediately. So there is a small cost to you going off and philandering with, you know, other Lightning Network people and forgetting about me. And that cost is there's a timeout, right? So if I need to broadcast the commitment transaction, I have to wait some like relative amount of blocks defined by 2 self-delay in bolt 3 that, you know, I can't get anything in this period. And why do we have this pause or this break? It's to give both participants involved in the channel a chance to catch and take action against wrongdoing. Since all recipients have collateral they can take from in the case of malicious action. So when I don't do a collaborative close and I just try and take an old update transaction between you and I need to wait because of the design of the whole system, which needs to give you a chance to look at that on-chain transaction and potentially take all the funds in the channel if I was lying, and that wasn't actually our last state.
Okay.
So this is the double spend prevention /
Double spend.
disincentive. Yeah, how do you feel about this system?
It's definitely complicated,
Yeah?
but it seems to work.
Yeah, that it does.
But yeah, it's a complex way to, you know, have everything routed in case there is someone who's trying to get away with
Stealing what doesn't belong to them.
Yeah, so they get rugged.
And maybe something else with this model is, you know, a lot of people don't like running Lightning nodes. They have to keep it on all the time, and it's kind of scary for them. They're like, oh, if I don't have it on all the time, my money can get stolen. It's not quite like that. You actually have 2 self-delay number of blocks amount of time to be like online to catch somebody stealing from you. It's just like better if you have it on all the time and don't like put it on once a week. But depending on this 2 self-delay, it actually could be viable to put it on like twice a week or 3 times a week and still catch somebody from stealing your money.
Timeouts will protect you if you're on once a week.
Well, yeah, depending on what you put for this 2 self-delay, you know, what's negotiated amongst your nodes.
So your Lightning node would have its own 2 self-delay setting, which you can modify?
Yeah, it's typically set to some default. They didn't say in the bolt, so
Yeah.
that's why I didn't specify what the two self-delay blocks should be.
I see.
But really, just wanted to get the concept out there that theoretically we'd make it like a week.
Okay.
You know?
Make it a week.
Yeah, or a week's worth of blocks.
Okay.
Yeah. Communication network. I was saying there has to be some way that we could interact
Mhm.
together. I can give you information about off-chain transactions and the like. And this is one of the ways. So the Lightning Network has developed its own gossip network towards the goal of sending payments through a chain of peers. And this is very much the peer-to-peer mechanism that the Lightning Network is lauded for.
Mm-hmm.
And the messages on the Lightning Network are more private than Bitcoin and use a scheme called onion routing.
So is this why Prem was saying that Lightning is more peer-to-peer?
I don't know if it's more peer-to-peer. Like it's peer-to-peer if you run a node, just like Bitcoin's peer-to-peer if you run a node.
Yeah.
How many people run Lightning nodes? Not many.
A lot of people are using LSPs where they run all the nodes.
Right, and even an LSP could rug you. So like you're very much trusting them. Yeah. Well, the LSP puts up some money, I guess. They fund your channel, but yeah, there eventually could be a way that you could put an old state where you could start rugging them. But if you don't have a Lightning node, or if you don't know how to construct these transactions, there's no way.
Right.
The Gossip Network is completely separate from Bitcoin in its operation. So this Gossip Network doesn't rely on Bitcoin's Gossip Network. It's completely different. Uses onion routing, which is very private. Does the term onion routing, ring any
Tor?
bells? Yep, Tor. It uses onion routing as well. And Tor, we know to be private, or I don't know, maybe private. A lot of people are caught on Tor every year. Okay, and unilateral exit. And in this slide, we're going to talk about an idea from BitDev's favorite here in replacement cycling, but let's go over the first bullet point first.
All right.
So since all transactions on Lightning are valid Bitcoin transactions, a user can just broadcast the latest up-to-date commitment transaction and wait to receive their funds. Again, if I'm not lying, if we're both honest, I can broadcast the latest update commitment transaction, and I can be pretty sure that I'll get my money. And that's nice, right? Unilateral exit, power to the people.
Pretty sure. High confidence.
Yeah, sovereign, all that.
Yeah.
So have a second bullet point. There is an attack that could be theorized. And again, an attack against doing this would be replacement cycling. It's from BitDev's favorite, Antoine Riard. We spoke about him a lot. A lot of topics you can see on our GitHub issues page, where one party who is on both sides of a Lightning node's payment route can evict the targeted Lightning node's transactions until the other party can cheat the targeted node out of funds. So I'll read this little thing beneath it, but just to give you like a conceptual idea, like imagine we have a payment path that's like me, and then Prem, and then you.
Mm-hmm.
You and I could do something. We can like bully Prem a little bit. We could do a monkey in the middle thing. We're passing things, and you're passing things to me, and Prem is trying to get the payment. And that's what this replacement cycling thing is.
Okay.
Yeah, it's like a monkey in the middle type thing. This is done through an RBF process that would theoretically be possible, but probably almost impossible to pull off. The malicious party would essentially have to prevent the targeted node from sending an input that the attacker is spending multiple times in different RBF transactions. So what that means is there's a payment secret that you have that Prem doesn't have, and like I am messing with Prem almost. I broadcast a transaction with that secret, and and then I use another input that is all mine, and I keep RBFing like that transaction with the second input.
So you're broadcasting flag replaced by fee
Uh-huh.
to the anchor or the previous transaction,
Uh-huh.
preventing anyone else or the other person from.
Yeah, or maybe a clearer way to say it, because I didn't do it the clearest here, but if I have input 1, and I use input 2 to make a new transaction with, and I RBF input 2
Mm-hmm.
such that input 1 is no longer used. And then I use another input 2, and I make another transaction with input 1, and then I end up RBFing that as well, and then input 1 goes away. So it's like I'm using this thing and like I'm discarding it. And the reason that I'd be doing this is because I am trying to bully the person in the middle of our payment route, which would be
Prem
Prem.
says, "Don't bully me."
Yeah. Okay, we'll bully somebody else, you know.
For this example.
Yeah, I know Prem wants to bully with us, so
Yeah.
let's say he's also an attacker. Yeah.
But you need at least 2 people for this replacement cycle?
Yeah, in this payment path that we need these. Yeah, it doesn't need to be 2 people, 2 nodes.
2 nodes.
So it could be one just
One
malicious
person.
party. Yeah. But yeah, they're trying to prevent a targeted node from like seeing this input. So you keep like RBFing this thing until you get a chance to broadcast yours.
Mm-hmm.
So the problem with this is like somehow when I make this spend with those 2 inputs, and I broadcast it to the mempool, there has to be some mechanism that I devise such that your mempool will never get that transaction. And it's like, how?
Yeah, how do I not
How do I
see it?
stop you from getting something that I'm broadcasting to the mempool?
Come in and plug my node.
Right, exactly. I come and I like, blindfold you and I'm like, don't look, So it's like a pretty hard attack to pull off. That's why I said like, probably almost impossible. A lot of weird qualifiers here because it's like, I don't see it. It's not a reasonable thing. So it's funny that they're like replacement cycling. It's gonna break
That would
lightning.
make it so I can't exit.
The
The unilateral exit would be.
It's so that you can't put like this timeout transaction.
Okay.
Like I want to prevent you from spending like this input. So like I'm spending it and like replacing it, spending and replacing, just so like you never really get a chance to like grab on to this transaction to do your own timeout from it. I keep spending it before you get to spend that, and somehow you aren't seeing my original transaction that wasn't RBF'd because I manipulated your mempool.
Right.
And it's just not like, it's just not something that would happen. But it's funny that you saw these articles come up that was like, replacement cycling, oh no. So yeah, unilateral exit, I guess that's what I have for Lightning. So constraint summary. On-chain collateral for payouts. It's enforced by using a multi-sig between participants, maybe you and I. Double spend prevention / disincentive, so penalty if the borrower is caught stealing. Okay, and we need a communication network to transact over. In Lightning, we have a newly constructed gossip network. And do we have the unilateral exit? The answer is yes. There are commitment transactions, the refund transactions for the funding transaction, so on and so forth. All things nice to have. Now, if we look at the liquid network, some things change. So let's go over the liquid network onboarding. Have you ever seen or heard of how you onboard into the liquid network?
Well, you could swap on to.
It's the easiest way to do
LPPC.
it. Yep,
Yeah.
swapping. But there is a mechanism for you as like an individual to go and spin up Elements node, which is like the general. It's the code base we use for Liquid.
Okay.
Liquid is a parameterized version of this code base. But you spin up your Elements node, and then you could actually make like perform a peg-in. You get a peg-in address that you pay that can go into the Federation wallet, and after 100 blocks, the Federation will credit you to your desired address on Liquid. Now, 100 blocks is a lot.
100 blocks is a long time.
Yeah, but it's to be very, very secure.
Mhm.
It's almost like the lightning delay thing that I was telling you about, right? Like it's like how many blocks could go by. These delays actually add security.
Right.
Excessive? I don't know. But it seems to work. Transacting. The Liquid network is a sidechain based on Bitcoin. That means most transaction semantics are the same as Bitcoin with 3 big changes. So if you've ever heard of Liquid having asset support, that is one thing. It has fields for confidential transactions. So it has like these range proofs and I think it's rejection proofs. And then you have explicit fee outputs. So in Bitcoin, fees are implicit. It's like how much money did you put in your inputs? How many did you put in your outputs? Oh, it didn't cover the inputs. Everything else we're taking as fee. In Liquid, it's like, no, it's not implicit. Let's just make it explicit. And that actually helps other things with like confidential transactions, for example. So there are also changes to the interpreter that allow covenant opcodes. Liquid does have covenants. The interpreter is a little bit different because it allows more opcodes like opcat.
So opcat's already on Liquid.
Opcat is already on Liquid.
It was never removed.
Well, I don't know if it was in the initial version of the code base.
It's there now.
But it's there now. So it's checkstick from stack and a lot of other nice covenant opcodes like tap, tweak, verify, and yeah, a lot of other good stuff. So this is how you transact. It's very much like Bitcoin. So adherence to constraints. Let's analyze this. Liquid network, on-chain collateral for payouts. The Federation's funds are in a multi-sig Bitcoin wallet that can always be audited on-chain. So with confidential transactions, you can verify nothing has been created or destroyed, and peg-in and peg-outs can be publicly audited by one's elements/liquid node. So this is a big distinction between eCash, which I like to make, that you can audit things on the Liquid blockchain. This isn't to say there's no place for eCash or Fedimints. I'm just saying that this is
There's a design trade-off here.
Exactly. It's so
Vulnerability.
distinct from eCash in that you can audit this in this Federation style. So it does meet my qualification for on-chain collateral for payouts, that at least you can see that they have it.
Yep.
Right? Double spend prevention / disincentive. So unconfirmed double spends are prevented by the gossip network of Liquid nodes. So Liquid, just like Bitcoin, if you try and double spend something that you're not supposed to, like if you don't, well now with full RBF things are changing, but before if you wanted to double spend something and it wasn't indicating that it could be replaced, you wouldn't be able to replace it. Everyone's mempool would reject it. And instead you can get mined directly, by a miner and have that be valid, but it just wouldn't go into a regular individual's mempool. So yeah, Liquid has the same semantics as Bitcoin with respect to mempools and unconfirmed transactions and double spends. So double spending confirmed transactions are prevented by the Federation never assigning blocks that don't follow consensus and never equivocating. So if the Federation never equivocates, then that's fine, this block signing thing works, right? But what if the Federation does sign a forking blockchain, equivocating a previous ledger? So the nodes need not acknowledge the new fork if they did do this, but it would still be a very bad thing because of this next point.
So so there's a Federation's signed a forked blockchain. Nodes aren't going to acknowledge the new fork, and then what happens?
Then you might just come to a halt,
So Liquid won't confirm anymore? There will be no more blocks?
I don't think so. I actually don't. I can't say for sure what would happen in this behavior. If it would close down. But in general, it's considered 2 blocks are final by your node. So after 2 blocks, it's at least with respect to my node, I will not accept any equivocation after 2 blocks.
Okay.
Yeah. Again, whether it shuts down or just lags and stays online, I don't know. I haven't looked at the behavior very closely. But maybe an interesting thing if I had a focus on Liquid, one of these sessions. So what if the Federation spends funds from the multi-sig Bitcoin wallet? Can a Federation steal from you? Nodes can detect it, but there's nothing they can do. So trust is placed in the Federation with this model. So if you don't trust the Federation, you do not trust Liquid. You do not trust the federated sidechain. If you trust the Federation, then everything's fine. But there's not really a way to stop a spend that you don't like with this Federation. Inherently, as part of this Bitcoin based model, if the Federation was able to have their keys and they wanted to make a spend outside of this multi-sig wallet, they can without permission of the people on the sidechain. In which case, things get depegged, right?
That's how we get a depegging?
Yeah, that is a depegging. So, yeah, trade-offs, all trade-offs. Liquid Network Communication Network, very simple slide. Same model as Bitcoin. Absolutely nothing special here. So, yeah, I can't imagine anything that, yeah, would distinguish the Liquid Network from Bitcoin with respect to the mempool. Unilateral exit. Does Liquid have a unilateral exit?
I don't think so. I think you got to ask the Federation to get you out.
You do. You
Yeah.
have to ask the daddies in
Yeah.
the Federation if you could exit.
Yeah.
So, so you could do one of these swaps, like you said, with bolts. They do offer atomic swaps back to the main chain. You could do closer to Fedimint style peg outs where you need a member of the Federation like to let you out. So Federation members can help facilitate peg outs, but regular wallet holders of Liquid cannot exit the Federation or exit the sidechain by themselves. So you do need permission. Constraint summary. On-chain collateral for payouts. It is enforced by multi-sig between these things called functionaries. So, functionaries are a subset of members of a federation. Double spend prevention / disincentive. It's enforced.
Okay, go on. Sorry.
Do you have
Functionaries different than like the Fedimint would call it guardian. Is that a functionary for a federation?
Well,
or just anyone who has a key?
No, I would say there is like some
ability to
distinction
sign.
between a guardian and like a function. Well, guardians and functionaries actually line up pretty well.
Yeah.
But a member and a guardian doesn't line up very well because
Right.
you could be a member without being a block signer.
And you're not a functionary.
Then you're not a functionary.
Yeah.
But you
But
could
you're still a
vote.
member.
Yeah, that means you could like vote on decisions in terms of like where the network's going to go.
See.
So double spend prevention disincentive. It's enforced by the federation. We need a communication network to transact over, so a new gossip network and blockchain, and a unilateral exit. Exits are managed by federation members. So, yeah, how does Liquid sound to you? Is it something you'd ever care to use?
I mean, I haven't really used it, so I guess not.
No. Okay, so would you ever use it in the future?
Potentially in the future, but at this point, I haven't had the need for confidential transactions or covenant opcodes or
That's
any of
right.
these explicit outputs.
Yeah.
Just I haven't woken up and needed that yet.
What do you think about the idea of testing things out on Liquid in terms of like covenant constructions?
I think it's a really good. I think any Bitcoin-like or similar to Bitcoin blockchains that are stable and reliable and have like a degree of continued support and like a decent amount of distribution, decentralized nodes. I think those are great environments for testing ideas to do on Bitcoin. I think that's the closest thing you've got. Like testnet and regtest and all these things, like they have much different trade-offs than like a production thing like Liquid. So I think that's one of the places where, but I'm not a engineer experimenting with these things, so
Yeah.
but I wouldn't see that there's value there. 'Cause
I
it's
do prefer Liquid.
reliable,
Yeah.
It's not.
It's real money.
Yeah,
you know?
it's real in a sense of.
And you could swap it out for
Yeah.
Bitcoin,
Right.
assuming that the collateral isn't missing.
Yeah.
So,
Yeah.
and outside of like Inquisition, or it
Yeah.
doesn't mean anything, because it's not real money. Yeah.
But similar to like other forks of Bitcoin that
Yeah.
have lasted to some degree, like even a Litecoin or other, they kind of exist as an example of, you try something that you can't gain consensus for on Bitcoin, you could do, or even like
On another chain.
yeah, like what Bcash did with bigger blocks,
Yeah.
or the SV thing. I don't know what they were trying to really prove. Yeah, but then it's just a playground and not really.
Yeah, well, SV went off the rails because like
They
had
tried too many things.
they had no limit.
Yeah, I don't know, I
They
didn't
had like
follow it.
gigabytes in their blocks, whereas like at least Cash, like they
Yeah.
made the block size bigger, but they had limits. Like they have elasticity.
What's
Uh,
more valuable for that use case at Liquid than like shitcoins?
Wait, what's more valuable than that
Yeah,
use
is there
case? Or?
anything that Liquid design for specifically like a test environment for potential Bitcoin upgrades that like shitcoins don't have.
Or the transaction model of Bitcoin.
Okay.
So like,
But a lot of them are still like UTXO based. Like Litecoin is still the same idea, right?
but Litecoin is they've enabled Mimblewimble, for example.
Okay.
Their architecture has drifted a little bit wider.
So because it's so close to Bitcoin.
It is.
Yeah.
And I don't know about Litecoin, but it seems like they have things like Mimblewimble, and their development has independently branched off. Liquid, while the transaction format is exactly the same, like part of the draw for Liquid is that the Elements code base pulls from the Bitcoin code base every like couple months or so. So it's like there's like a big rebase that's done by some of the Liquid guys, and like they're literally updating Elements with the Bitcoin code, so that like any improvements that are made to Bitcoin do get adopted into Elements. So the semantics of the mempool, for example,
maintained for parity.
Right. Like I can't try V3 transactions on Litecoin. I can't try the Gloria's BIP, whereas I can try that on Liquid.
So any of the like altcoin interest and motivations to like show something that should be brought to Bitcoin should just be using Liquid.
I mean, yeah, or Bitcoin Inquisition if you really didn't want the Liquid features, but if you wanted to put real money on your implementation in your use case, then I would say Liquid is the best place to do it. And
specifically if you're talking with the context of this is something for improving Bitcoin.
Yeah.
Then it should be like that.
Because Inquisition has been a way for some developers to like shrug off other developers.
Yeah, there was an era of Bitcoin forks or altcoins saying it's like Bitcoin, but this is what we do better. So like they should just showcase that on Liquid, which is much closer.
Yeah, but specifically constructions that they want to bring to Bitcoin. Right?
Or you said Inquisition, which how is that different than
Liquid?
Is that an L2?
No, that's like a Signet.
Where does it fail?
What's the say? Bitcoin Inquisition is not meant to represent real money.
Okay.
It's a Signet.
Because it doesn't do payments or payouts or anything like that.
No, it's all like coins are meant to have no value.
Okay.
But they do incorporate opcodes that Bitcoin doesn't have, like opcat.
Yeah.
But
so Liquid is got value where all these other environments aren't intending to.
Right, all these other Signets, those coins mean nothing. They're not meant to have value, and in fact, they're designed in ways such that they might get reset in the future if you try to ascribe value to them. Yeah. Well, now we have another layer 2, ARC.
Okay.
Do you have any interesting thoughts
about ARC? So is this
ARC?
layer 2 or layer 3?
Why would you say layer 3?
I don't know.
If you have a definition for layer 3, I'm welcome. What do you know about how ARC works?
So ARC is instead of channel based, it's borrowing a UTXO model, but like a shared UTXOs where they have virtual UTXOs, and there's like one liquidity provider that it's an ARC service provider or whatever, and they allow people to transact potentially faster, cheaper, or better economics for payments on within the ARC layer, and then maintains the ability to permissionlessly leave if the ASP is not doing things properly.
Yeah.
So that's kind of like what makes it, I think, a layer 2, or at least as your definition, I think it fits.
Yeah, maintain payments within a UTXO, allow people to unilaterally exit, all that nice stuff should be allowed by ARC.
But it's on Liquid, it doesn't exist on Bitcoin.
It can exist on Bitcoin.
Okay.
Through Clark's, the covenant, less ARCs.
Okay,
but
so
it's better with covenants. Yeah. But you can do it without covenants, and that is another way you can accomplish
it. Did I get it right?
Huh?
What does the next slide say?
Well, first I was going to go over how it works.
Oh, okay.
ARC. Onboarding. The user puts their funds in a multi-sig. So all this isn't based off the Liquid implementation. This was based off arcpill.me, the first website.
This is ARC v1?
Yeah, arcpill.me, the website is now defunct.
Ah, wow.
So, yeah, now it's arcdev.info if you want to get. But I have not thoroughly looked through that website, so I don't know the designs they have. So I'm going over the first, um, like, conception of Arc.
Mm.
It might have not changed at all, really. Like, but I just don't know. I haven't looked at arcdev.info that closely.
Okay.
So in the original arcpill.me, a user puts their funds in a multi-sig with refund paths built in. Think like, it's almost like this, I was saying think if statements. If like you're a programmer, if one thing happens, you could take a certain branch. If another thing happens, you take another branch. So, but there is like a refund path or tap leaf because you have different options you could exercise. Second thing, ASP makes a UTXO where the recipient can claim transaction from and gives it to sender. So again, I'm a user, you're the ASP, I put my funds in multisig with you. You make a UTXO where some recipient that I want to pay can claim from that UTXO. And you give that UTXO like to me, or you give that transaction that you're spending to my recipient to me, with some proof that you're giving something to my recipient. The sender validates is good, so I'm like, hey, like everything's good, and I call it a Smartish contract to give their multi-sig funds to the ASP. Yeah, when the UTXO is broadcast. So it uses this mechanism called like ATLCs, is what those coined, but
or
it's
time lock or something.
I don't remember what it was supposed to be. It doesn't really make any sense. It was supposed to be like almost a joke on HTLCs,
Yeah.
but it's pretty much I ask you to pay somebody on my behalf, and then you make an output that's almost dust, and I will reference that output. That's the second output on the transaction you're supposed to pay somebody you want, and I use that second output to make a transaction that pays you.
Okay.
So now I've made a conditional payment from the multisig to you that's contingent on you paying my recipient. No, this is how I try to say it. Sender validates is good. Makes a Smartish contract to give their multisig funds to the ASP when you broadcast my UTXO to my recipient. ASP broadcasts UTXO, and you get to claim the funds in the multisig escrow that we have together.
Okay.
Transacting. If you're a recipient of an ARC transaction, you can transact within ARC. So once you have received the money, within this construction of an ARC, you're free to keep transacting within ARC. You can broadcast a staging transaction to a multisig that lets you use another transaction to spend with an ASP to another ARC recipient or claim the funds on chain after delay. So, if you wanted to transact, one way that you could do it is you work with the ASP, says, hey, give me like the staging transaction. And if you broadcast a staging transaction, it's an indication to the ASP that like either you want to pay somebody else or you want to take your money, right? You want to take your money back after the delay. So if you wait 2 weeks, the sender can broadcast their own staging transaction to get their money back. So the staging transaction has a multi-sig output. It also has like a different condition for the output where I just have to wait. So it's either you spend immediately or I have to wait like this delay. And if after 2 weeks, my recipient doesn't do anything, I can take the money back.
As an ASP. Or wait.
No, after it's the sender.
And the sender can take it back.
Yeah, so like if I'm the sender and you're the recipient, then I can like send something to you, and if you didn't use that VTXO, is what they call it, within 2 weeks, I can actually claim that back and take the money back.
And then after 4 weeks, the ASP can.
Yeah, after 4 weeks, the ASP can claim the funds. And that's because of an optimization that I'll try and just explain on the next slide, and hopefully it makes sense. But if the user says they want to pay someone else in the ARC, they can just give the ASP staging transaction and the spend transaction. So ASP can then use one transaction to claim after 4 weeks, or use their spend transaction if the user tries to cheat them by broadcasting a staging transaction that they would get a refund from.
Okay, that's blocked on the string.
Yeah, so like it's like, okay, cool. ASP, here's my staging transaction and the transaction that gives you the funds because I signed off on it and I know you're gonna sign off on it. You're like, cool. But then like after I gave you that, I'm like, actually I want the money back. So I try and broadcast the staging transaction and wait the 24 hours. But because the multi-sig is immediate, you're like, hey, no, we had a deal, and you automatically spend it to like the next recipient in the ARC. But the best ideal case is I don't try and cheat you at all, and you just wait until the 4 weeks. That way, there's no like staging and spend transaction. There's just one transaction, which is your spending after those 4 weeks. That make sense?
Yeah.
Okay. So there's the UTXO sharing. I explained the other things without the UTXO sharing because I thought the UTXO sharing makes it like it's really where all the complexity comes from.
Okay.
But in our
how is it different than a coin pool?
Coin pool is designed such that there would be covenant opcodes that would restrict you. This is like a UTXO sharing scheme that is made so that you don't need covenants, but covenants would be nice if you had them. And the covenants that you'd need aren't specific to enabling UTXO sharing. It's like more general covenants, like CTV. It's not necessarily made for UTXO sharing, but it can be used in this scheme to help enable UTXO sharing. Yeah, so in ARC, all the users share UTXO with their claim value labeled a VTXO. So even though we share like this UTXO, I have a certain claim to like an amount in that UTXO. You have a certain claim, we just call that a VTXO, a virtual transaction output. Now, if a user wanted to broadcast their staging transaction, one of the ways they could exit is by broadcasting other people's staging transactions in a pre-signed transaction path made by the ASP. So the only way for me to unilaterally exit is for me to like carve a piece out of our shared UTXO and like broadcast that. And like the way that like pretty much I'd have to do it is by having a transaction path where it's like, let's say the ASP makes a transaction path where I'm first. So I get to like broadcast my staging transaction and I could actually make another output the rest of the money. And that's all pre-signed. But if he makes the path such that it's 20 other people and then me, I'll have to eject everyone before me. Like I'll have to spend their pre-signed transactions, get a new output, spend someone else's like pre-signed, get a new output
So
until I
you
get
need to
some
be
money.
online all the time signing all these?
Or
is it,
no, only when I want to exit would I like perform something like this,
Okay.
where I'd have to eject people before me out because it's based off this like pre-signed path. Even with CTV, it'd be a like pre-signed path, or like not with CTV it would just be like a covenant path, but there'd be a path to ejecting people out of the ARC.
Okay.
And I can't just like leave by myself sometimes, unless maybe I paid more and I said, hey, I want to be first. Maybe
So there's a
I can do
market
something like that.
for the path.
There could be.
Yeah.
These are all like
Yeah,
ideas
yeah,
that I
yeah.
have, but maybe there's not a market and it's random, right? And I've spoken to some ARC designers and they're like, yeah, we don't, we're just trying things out, right? Yeah, so trees pushing others out, maybe not the nicest UX. And there are also implementations that can use CTV and other covenant opcodes to simplify this, but efficiently exiting without burdening others seems to be an open problem. I'll always burden somebody else. I don't want to burden someone else. With CoinPool, I can have opcodes that are specifically designed to let me leave and like whenever I want and not burden anyone else.
Right.
So that hasn't even entered the discussion.
Leaf verify?
Tap leaf, yeah, update verify.
Yeah.
You probably do it with that, and then I think there's something in OpVault that might allow you to have these unilateral exit type schemes with UTXO sharing. So there are a couple of different opcodes which might make UTXO sharing a lot easier. But none of them really have been proposed or pushed in ARC because maybe the closest thing to being implemented is something like CTV or op transaction hash or liquid opcodes because at least they're tested.
Yeah, at least they're tested.
So let's look at the adherence to the constraints that ARC has. On-chain collateral for payouts. So the user puts their funds into a multi-sig with the ASP. There's a timeout on this multi-sig in case the ASP doesn't do their job, right? That's fine. But we have an on-chain collateral. All funds are always in some form of multi-sig with the ASP as long as you are in an ARC. So there's always some kind of multi-sig that we've got going on. User goes into a construction with ASP that says the ASP can collect the funds in the multisig if they pay a recipient with a separate transaction. So this is the on-chain collateral we have.
Got it.
This is done by the user
Check.
Check, yeah, check. Yes, this requirement is check. This is done by the user making a transaction that references the low value output on the UTXO that will pay the recipient on their payout to the ASP. I tried to explain that a little bit earlier, so I won't go too much into that. Just to see if we get another check. So double spend prevention / disincentive. ASP has a risk of getting cheated with the staging transaction. So when a user broadcasts a staging transaction, an ASP needs to be ready to detect it and catch it with their spend transaction, or else they'd get their money back within 24 hours, and they'd be cheating the ASP in that way. So there is some interactivity that the ASP needs, which is fine because they're a service provider. There's probably some company that has a lot of liquidity. They could have a server on all the time looking for people doing things that they could correct. So what if they didn't make a payment they promised? For onboarding, not if onboarder gets the transaction that spends to the recipient, because then they could always force ASP's hand by broadcasting recipient payout transaction. If I'm onboarding and you never made a transaction you said you'd make, if part of the deal of me putting money in escrow was I can always unilaterally post that second transaction, then I don't need you, and I could force your hand by broadcasting that. Again, these are design consideration. Maybe someone wants to tweak that in ARC. For transacting, if a user sends something to a recipient, they should always have a way to force that to happen if they get the transaction spending to the recipient. What was I trying to say here? They should always have a way to force that to happen. If I send something to my recipient and you don't want to, pay this recipient, I should always be able to do my spend transaction, my staging, and then my spend transaction. So if they don't make a payment they promise, pretty much the user should be able to broadcast them as part of the contingency of the ASP having funds at all.
So you should be able to construct it yourself.
Yeah. Is what I was trying to say here.
Okay.
So if they don't make a payment they promised, it would be nice if during this ARC design they make it so all the users have the transactions they need to force a payment to happen, as long as that user has posted their collateral.
Yeah.
So recipient can get copies for this path as well. So I was trying to say here that the spender can receive certain pieces of information to pay the recipient, but maybe it makes more sense to give it to a recipient, right? If I'm a sender, I'm like, hey, you deal with it. It's yours now. Here's the information you need. If the ASP lies, then you go and handle that yourself, right? Or if they can't really lie. If they don't do something that I want them to, I can always take it as a refund. But how about if I just give it to you so that you can take action if they don't do what they said they're going to do?
So it's almost like representative.
Yeah, so there's always a way for us to take action to get our money. Just like there's always this way of the ASP to take action to get their money. So it's very hard to cheat each other. Now the problem comes with unconfirmed transactions. Now recipients, this is kind of a long slide, so let's see if we can go through the logic.
Stream's still going, right? Somebody said it was frozen for them, but I don't think it's frozen.
Okay. For you, it's okay?
It's fine for me. I see it fine.
Okay, I'll try and play it.
Yeah.
Okay.
Not frozen.
Yeah. Okay, good, yeah. So can the users get rugged with unconfirmed transactions? Recipients need to be somewhat active for the case where ASP never makes the payment so that the recipient can broadcast a staging and spend transaction to claim their funds. Again, this is me saying, hey, I'm going to give some money to you. Here's some information just in case the ASP, I don't know, is dragging their feet. If the ASP found an idle user, they get refund without making promised payment. So if you forget about your payment, then the ASP gets that money. Or if I told the ASP, here's my staging and my spend transaction, make this payment out to the recipient, and they never make it out, and you never claim it, and I never claim it, then they get the money, right? But that's something they can do that they shouldn't have done. Because if I give them that spend transaction, it's up to them to make that spend happen for my recipient. Sure, there are ways that we can go and counteract the ASP, but I don't want to have to be interactive all the time. So it'd just be nice if they just did it. And only after 4 weeks could the money be completely lost. So really, we'd have to be online within these 4 weeks. Again, this is the initial construction for ARC. You could tweak these times to whatever you want. So a sender can also potentially rug recipient with ASP and miner collaboration by, so I have a staging and spend transaction that's supposed to go to you, and then I sign a new staging and spend transaction that goes to Prem. And I get all the other people in my shared UTXO round to do this as well, because the ASP is helping me get their signatures. So we find a miner to mine those 2 transactions, which is like my new staging and my new spending transaction, because presumably we'd have our other transaction in the mempool already. So like maybe there is some transaction that's supposed to pay you, but since I'm like trying to cheat and like use that same money to pay Prem, I talk with the ASP and these miners, and I'm like, hey, any transactions that are supposed to pay this guy, disregard them, just use this new transaction. And everyone in my pool agrees with me. Yeah, exactly, a collusion element to this, right? And really, it only takes one transaction to like invalidate maybe a chain of unconfirmed transactions. So just to change things. Again, as long as I get my round partners to do this with me, I can still stay within the ARC, save on fees, and cheat everyone who has their stuff in the mempool. So I need an ASP collaboration and like miner collaboration. And it really takes, again, one confirmed transaction to invalidate all the unconfirmed
So
ones.
would miners just become ASPs
Yeah, miners could become ASPs.
Yeah.
There's nothing stopping them from. Just like, miners could also be channel partners.
rug
But it's easier to, it's easier to rug people because it only needs like, again, if you had a chain of unconfirmed, you just need one to like change everything. Whereas like with Lightning, there's a delay that that allows someone to do the revocation. These spends or when you have the staging transaction and the spend transaction happens like immediately. Like there's no really delay. It's almost assuming that, okay, nothing's gonna happen after I sign this transaction. But unless it's confirmed, these things can always be invalidated. Well, hopefully that made some sense. The idea is if you wanted to be the safest with ARC, you want to make sure that all the transactions that you're receiving within the ARC have actually hit the chain.
Okay.
But then we reduce transaction throughput. But we still get the security of Bitcoin, and we get less fees.
Is this where the 30,000 people?
Right, yeah, if you had 30,000 people, let's say you could only do a transaction every 10 minutes, but with 30,000 people sharing one UTXO, your fees are going to be like nothing because you're all sharing it.
Yeah.
So is it the worst thing if we weren't able to achieve the transaction throughput that might be promised with these layer 2s? And maybe. And just because these things are like possible doesn't mean they'll actually happen, right? And maybe it's already been changed in the newer versions of ARC. I have to look at it, review, but this is just what came to my mind as I was like, just like brain vomiting on the slide. In this way, cheaters can only be cheated with a special RBF-like construct that can only be done with miner collaboration and doesn't have 100% chance of success. So regular miners can also mine the regular transaction in the mempool. So if there's a chain of unconfirmed transactions, one was supposed to pay you, and I did an extra thing with Prem and I tried to get that one mined, maybe the one paying you got picked up in the mempool by the rest of the miners and got mined first. And the rest of the unconfirmed transaction chain actually ended up okay. Because maybe the fees from that chain are going to be higher than what they'd get from me doing my special transaction. So it's like, a little bit of game theory. It's like, does this make sense for them to do? But is it possible? Sure. Does it make sense? That's another question. Yeah, and even if it's possible, it's like, if the other miners aren't mining this regular transaction, and if this regular transaction's in the mempool, then maybe. So communication network, ARC doesn't need a gossip network because an ASP is organizing these transactions, and this could be done in a server-client model. You're an ASP, I just talk to you, and other people talk to you, and he helps organize everyone together. But I guess the same could be said about Bitcoin transactions and there not being a mempool. You could also talk to miners directly, but you'd lose something. I guess with Bitcoin, it's all about like bidding up fees.
What are we losing in this? In this
Well, I was saying if you do, server client model, at least with Bitcoin, you wouldn't be able to see like what fees everyone else is paying.
So the transparency.
You wouldn't be, exactly. Wouldn't be like competitive with other people. It's like how are ASPs gonna be like calculating fees? Are they gonna do theirs based off a market that I can't see what other people are paying? Or are they gonna have like flat fees? Pretty much like, transparency, I could see a use case for that in like fees and maybe having gossip for that. But this is also considered like, where it was considered a coin join by construction. And you would think that maybe the privacy, like desirability in a layer 2 like this would get degraded by having like 2 public gossip networks. I feel like I'm gonna skip by my nose. If a gossip network like Lightning was created, ASPs would need a way to announce to everyone who's involved in the round and which signatures were provided. So if they wanted to create a gossip network like Lightning, then different considerations, more transparent, right? Users don't need to interact with each other to make a payment like the Lightning Network, and any general validation would require information to be leaked. Again, like, there'd be some information leakage. Maybe there's a way to do it like somewhat privately.
Yeah.
But also, like, is it worth it? I don't know. Like we talk to LSPs directly. We don't really have a mempool for seeing the prices for different LSPs. Just kind of talk through the APIs. Because I see ASPs as more like LSPs, not like Lightning Network peers that I need to route through. So it's just like different. They could have a gossip network.
You negotiate and have a different.
Yeah, it just depends what they want, right? Like, what are the trade-offs? Like,
We got a question. Can you do what Mercury does, where it's blinded?
Maybe.
I hear a door.
Oh, okay. So someone's knocking. Oh yeah, that was Jerry. I just see he had a message.
All right, I'll be back to that question.
Okay.
You see the question now?
Yeah. I unfortunately don't know much about Mercury Layer, so I don't know. Can you blind things? Yes. I just don't know any of the intricacies with Mercury Layer, so I wouldn't be able to say whether you could do it exactly like they do it. But yeah, you could have some blinding model. All right, how's it going, Jerry?
We're about to wrap up.
Yeah.
I forgot it was like today.
No, that's cool. But yeah.
So like Signal, that was the follow-up.
Huh?
Does Signal do blinded communication layer or something?
Signal has end-to-end encryption.
Yeah.
Um,
That was the follow-up, was like Signal.
Can they do but Signal is not really a peer-to-peer, is it? Can you have end-to-end encryption? Sure, between a server and client type model. But
To reduce the leak, we were talking about leaking.
Yeah, I'd say the blinded models are closer to that, like a Chaumian eCache type construction, where you say, hey, sign this, and then you can't see any other information. So maybe with that construct, yeah, I could see there being a way to blind things or make a blinding scheme such that people learn some things about the transaction, but not everything. And maybe you could have an active fee market with bidders using a gossip network for that. Yeah, it all depends what you want from some communication network when determining how open it should be or not. But I have another metric for the ARC unilateral exit. An ARC user would adjusting their path of saving transactions to broadcast and wait 24 hours for a refund. So you can do this unilateral exit on ARC. Yeah, and
Check.
Yeah, exactly. Check. You know, and there's not really a way for them to necessarily cheat you, because it's very active. The way that you make these pre-signed transactions, you need to have multi-sig transactions signed by both parties to get and spend to go through. So an SP can't really rug you, unless they're completely idle for 4 weeks. then they could take your money from you. I don't know if that's rugging, because that's part of the system design. So constraint summary. Yeah, what do you think of ARC? Did you get anything out of the slides?
I think so. I think there's a bit of like complexity around like just making it so people aren't getting, I guess, reducing that risk of people being able to steal if you don't come on after 4 weeks or 2 weeks and then 4 weeks of the ASB. And like I don't know, it just kind of seems tricky. Like I would be a little nervous to really use this as my faster or cheaper Bitcoin solution based on like, oh, what if I don't do it right? You know, at least at the beginning. It seems like, especially since we're talking about something that's still almost in the design and testing and it's changing. There's a V2 and it's on Liquid and it just, I guess the covenantless Clark version exists, but it doesn't seem really compelling with its current construction. So.
Yeah, I mean, even with Liquid, it's not the best user experience. At least when people leave, that's really where it kind of crumbles. Everywhere else is like very elegant. Yeah, it's a pretty.
Until people leave, yeah. So that's where.
Yeah, exactly. When people want to leave, then they could leave. It's just sometimes an inconvenience for others.
But that's where we kind of landed, at least in a bit of a lot of the. Is this an interesting idea? Is in how people are able to leave. Like if people can.
Yeah, they can. It's just a little bit hard, right?
Yeah.
But they can still leave. You know, they can't get their Bitcoin stolen.
Right. Can you, in a permissionless way, get back to Bitcoin on chain without having people potentially in the middle to prevent it?
Right.
So that's the complicated part. It seems like.
Yeah, and the liveness requirement, like you said, like you'd be scared of doing something wrong after 4 weeks. Let's say just like, I mean, hopefully no one thinks like this, but how about if someone did enter an ARC thinking this is going to be a cool new form of like cold storage, like I'm going to have my keys that I use for ARC,
and
like
then 3 years later they come back and
it's all gone, so
it's
I don't
like that.
Yeah, I mean there needs to be some explanation given to these users, and hopefully no one's doing that. Or at least the tools will probably make it like hard enough to try and do something like that. So on-chain collateral for payouts, we do have that. It's enforced by the multi-sig between the participant and the ARC service provider. Do we have double spend prevention / disincentive? We do, because everything's kind of like ASP managed. Again, there's like some tricky things that go on with respect to unconfirmed transactions, but if you wait for transactions to confirm, then you should be good. And even with unconfirmed transactions, you could make it such that the game theory like wouldn't make cheating like recipients make sense. So we need a communication network to transact over, newly constructed servers, gossip not needed, but gossip could be used, Unilateral exit, we have that because we could always refund in our onboard transaction, and we could do a refund after we do our staking transaction. So other layer 2s that I didn't mention but are worth the like a slide are Fedimint and Mercury layer. Fedimint I know a little bit about here and there. Mercury layer, it's like almost nothing. So
maybe that's a good topic for upcoming.
Yeah, state chains. Yeah, maybe that'd be another topic for expansion on layer 2s.
Yeah, layer 2 follow up is evaluating those two against the same like constraint.
Exactly. Using my constraints for a layer 2 against more
can we follow
proposals.
Up with Fedimint and Mercury next
Right. Yeah, that could be a potential topic.
Oh, shade to rootstock.
Huh? What's that?
That's the comment.
Shade to rootstock?
Yeah, it's like you're throwing shade at rootstock. RSK, not a layer 2.
Oh, yeah, RSK. Yeah, it didn't even come up in my mind. Is that shade?
I mean, the fact that it didn't get a mention Mercury. And
okay, yes, yeah, I guess it is some shade, by accident.
So we looked at 3 of the more like considerable, well, at least Lightning and Liquid have gotten a lot of attention. ARC is a newer, more interesting within the last year, so it was announced May 23.
Yeah.
So we just have a little over a year with this at least having a formal name. But yeah, Rootstock has been around a lot longer. There's all this merge mining going on. There's this like side chains.
Yeah, Rootstock.
elsewhere.
You know, I'll add to this this list.
Mercury, yeah, I think there's
Mercury's
questions
also
coming in
been
from
around for
from
a while.
The chat, so we should touch that one. And then Fedimint seems to have been getting a lot of the discussion around this is how we scale Bitcoin.
So
eCash.
I'll learn something about Mercury Layer.
Let's
and
do those three next.
yeah, I'll learn more about Rootstock, and then maybe I can do those assessments as well.
All right, join for number 17, or
Yeah.
maybe in the follow up, there could be another topic in between then. But
Yeah.
cool.
You know, I'll feel out.
I definitely feel like I understand the way you're kind of the lens you're providing makes sense as to why these are the things. And I had this looser unilateral exit idea, but kind of unpacking it a little bit was pretty helpful. So I'd like.
Yeah, giving some definitions to things.
Yeah.
And then I did want to. These are the closing slides, but I wanted to think about the influence of layer 2s on Bitcoin protocol development going forward. So a lot of people don't really like the fact that some things in the Bitcoin protocol are changed because of a layer 2 and additional technology just for payments. And changes are proposed to Bitcoin all the time towards the purpose of enhancing layer 2 technologies, right?
Right, but the last BIP that got merged was sold as, and motivation was as to improve Lightning.
Right. Yeah. So it's, I mean, it's a good and bad thing, because some people don't even care about these layer 2s, and they think these changes are messing up their Bitcoin.
Yeah.
So, a partial motivation for SegWit's non-malleable transaction IDs, for example, is the Lightning Network. Same thing with these time locks and all these other constructions. So an important conversation to have going forward is the assessment of the level of importance we should place on layer 2s when developing Bitcoin's protocol. So the assessment of the level of importance is kind of like a hard thing to make, right? How important is a layer 2? Such that it needs to be involved in a discussion going forward. And another question is, should we start developing objective metrics for which the community can qualify a layer 2 motivated change? So with layer 2s, I feel like we don't have enough objective metrics to compare and contrast them such that we can find majority consensus of Bitcoin users who say, yeah, these metrics are good, and anything that aligns with these metrics will push to get into Bitcoin. So kind of like a standards, maybe body that has metrics for what is desirable and evaluates these layer 2s, like how I'm doing, except maybe even more rigorously to try and motivate, better changes to Bitcoin that can actually be community validated.
Then you get more of a framework to kind of compare apples to apples in a sense, where you can have these metrics that are more objective, and rather than getting political and some of the other.
Yeah, at least for
aspects.
measuring.
Who
right?
wrote this, or who's the champion?
Right.
You can kind of parse out the impact and realities.
Yeah, less politics that are related to externalities to the technology being spoken about. And yeah, that's the question I wanted to leave off on. This is the last slide. Yeah. Any other thoughts?
Should we start developing objective metrics for which the community can qualify a layer 2 motivated change? What are the suggested metrics?
Oh, I don't know. I was just saying, should we develop these metrics? I don't have any proposals.
But what type of examples would you?
Maybe transaction throughput.
So a TPS.
TPS could be a consideration to make.
I did see in the recent roll-up post was comparing the different roll-up constructions, and they're giving trade-offs. And then there was a certain types of transactions, and I think TPS was one that was comparing across.
I haven't read that either, but
look at it. Can we talk roll-ups as are these roll-ups, are those layer 2s?
I don't know much about roll-ups, but that could be added to the second continuation.
Yeah. So here's what I'm talking about. This
transaction transfer. Where is it?
So it's
the TPS at the bottom. Okay, I see.
So comparing what like an NFT auction using this type of roll up, or a token order, or a token transfer, like what would be the transactions per second of these transaction types
All right.
in this roll?
Yeah. See, so like metrics like that. Well, those seem kind of weird. It's like NFT. What?
Well, these are the different types of things you could do with the B roll up.
Yeah, but he has TPS like scoped to the type of action, so it's
Yeah.
Yeah, that's not quite what I was thinking, but I mean, if we're thinking about general layer 2 design, maybe it's like the amount of transactions needed to onboard or something, the amount of transactions that can be made off chain from one peer to another.
Is Omni layer a layer 2?
Why does that sound familiar?
That's what the Tether.
Okay, yeah. I would call that meta protocol, just because it's not like Bitcoin-backed payments. Again, this is just my definition.
Yeah.
Anyone else could make separate definitions.
And ordinals is a meta protocol.
Yeah,
so
call
like
it meta protocol as well.
BSPT-based ordinals, like scaling things.
Yeah, because like
are meta protocol.
You have like ownership of a SAT, and you can't really spend like a SAT, so you spend like a bundle of these UTXOs. But it's not like about Bitcoin-backed payments, and it's not off-chain.
Mm-hmm.
So yeah, another meta protocol.
Is BitVM a layer 2?
Is BitVM a layer 2? That one's a bit like harder. You escrow some funds as part of like this contract, so I'd be leaning towards saying no.
Yeah.
But maybe like a better thing to say to leave it open is maybe there could be construction that uses BitVM's paradigm to develop a layer 2. Like Robin, I know he was doing his bridge, with the BitVM. So maybe you can call that like sidechain that he wants to make, with his bridge being based on BitVM, a layer 2. But BitVM itself, I wouldn't call.
Okay.
Yeah.
And then Jekansik 17, BIP 300 measure everyone on Earth onboarding is the question. Wait, did I read that right?
Oh yeah, well, BIP 300 drive chains.
BIP 300
Another topic that could be added. A lot of proposals that clearly were left out.
Is that modeled to fit today's definition of layer 2?
Yeah, I mean that would also be a metric that we could look at. Yeah.
You just have to wait 1,300 blocks or whatever it is to.
Yeah, I don't know what the delay is. I think that was changed a couple times with BIP 300.
Blocks. I don't know what's that counting to.
I don't know, but I mean, these would be also side chains anyway. It'd be his own construction of side chains. But yeah, it'd be a consideration there as well. Maybe consideration of the game theory.
Yeah.
I mean, we have like game theory and like I don't know, as a subject in math. So I'm sure there's some objective realities that we could extract, such that we can analyze in a game theoretic model that's standardized. So yeah, game theory is very important to see what incentives miners have. And although I don't like agree with Saylor saying, oh, when you create layer 2s, like you're stealing from miners their properties because their ASICs are worth less because the transactions that would be bid up on main chain are not going to layer 2.
Right, yeah.
So I don't think it's stealing, first of all.
You reduce fees, you're taking money off of miners' plates.
Yeah, it's not stealing, it's really just obstructing them from collecting as, profit.
It is creating a challenge.
Yeah, it's creating a challenge. But he's like, oh, stealing, their ASICs, you devalue their ASICs now because you made new ideas for other people to use to transact on.
But that's like saying, is my invention of the ice maker devaluing the ice block farmers' infrastructure?
Right. Yeah, are you stealing from the ice blockers?
Them,
are you stealing their machinery?
It's a disruption.
It's a disruption.
Yeah.
You're not stealing.
Yeah, I think disruption is a better verb. If it's not stealing, it's disrupting. And yeah, is it okay to disrupt Bitcoin miners? Like make their life less prosperous, or their activity less profitable, less profitable?
Yeah, these are things
that attacking Bitcoin, because miners
attacking
ultimately
Bitcoin
secure the network. So
yeah, if you change the game theory,
if you're disrupting miners, have allocated all this capital to secure Bitcoin, and with all the code base continuing to be what it is, gives them the best, most secure impact. and
Yeah.
now you're gonna go change it, and you're undermining their ability to secure it. So in that sense, it's a disruption still, but like they would maybe be hostile to these ideas.
Yeah, and that way, like, I agree with some of the sentiment that like Michael Saylor expresses, but he's more like when there's like a kid and they're like, oh, there's a monster under my bed, and then the adult comes in the room and they look under the bed and it's a cat with like a glare in their eyes that make their eyes look red.
Yeah.
And it's like, oh, like there was some basis in what the kid was saying. It's just like maybe it was overblown a little bit or said in an incorrect way, but like the sentiment there is, I do feel correct. That we should look at the game theory of Bitcoin. We should try and make sure that things are managed well, so that the system doesn't fall apart. System incentives that we have. But yeah, but this is a question I have to pose. If you have any ideas, you could go and draft it up, join a mailing list. Enjoy all these different things and.
So wait, you could answer this question where?
If just saying, if you join the Bitcoin mailing
The
list,
Bitcoin
and like,
mailing list.
yeah, you propose
I
some
thought there
ideas.
was a UBS mailing list.
No UBS mailing list, but like I was just saying, the official or Delving Bitcoin, you can go on there and like answer this question. Although I've been like pretty delayed.
Hey.
Oh,
Yeah. Hey, how's it going? This is the last slide, but we can hang after.
Yeah. I thought, the Twitch chat shrunk in size, but now I think
Yeah,
we're
it was
good.
actually like cutting out.
Oh, it wasn't working.
But I was in the area. I was hanging out with your buddy from Liquid, James.
Oh, okay.
Oh,
Yeah.
nice.
I was telling him you're a perfectionist, so I gotta get on this because you take down your Twitch stuff after. Won't bring it back
Oh,
up.
they do. It's after 7 days. I'm not a partner,
But
so.
it's all going on YouTube now.
Was it?
All
Yeah,
the
now there's
streams,
a YouTube
the
channel.
recordings are going on YouTube, so we gotta.
Yeah, I made a
Yeah.
playlist of
Oh, nice.
stuff.
Thanks.
Yeah.
But on the stream, maybe we could just discuss more.
Oh,
offline.
you got doxxed. Premise that sounds like Prov. Randy calls Michael Saylor a little kid making a cat under the bed.
Yeah, it's an analogy, Yeah.
The Darth Vitalik.
Yeah, that's their pseudonym, Vitalicator. That's their second pseudonym, Vitalicator.
Really generous content from Jakenzik17 says we're putting out the best technical content. Needs to watch recording back. Shout out, thanks.
Yes, thank you all for watching, and I'll end the stream. We can discuss more. So yeah, see you all.
Until next time.